So imagine this hypothetical scenario. In the distant future, the year is 2025, and a company called Tesla, with an over-the-air software update, begins legally operating the world's first mass market robotaxis. Not just a tiny little service somewhere, but something that will completely disrupt transportation as we know it and transform Tesla, the company, from, quote, just a car company to one of the all-time great money printers. You know what's crazy? 2050 is now closer than 1999. We are in the future. Robotaxis are almost here. And according to the title of this video on CNBC, there will be real challenges in getting behind Tesla's autonomous program. So let's see what Colin Rush of Oppenheimer, who has a very good track record in his stock picks, has to say.
Shares of Tesla have now fallen more than 15% from their all-time high in mid-December. And joining us right now for more on the company and the stock is Oppenheimer senior research analyst Colin Rush. Colin, looking at this, down 15% from that all-time high, but there was a pretty big move if you're looking back over the last 2 months at that stock from the election. And, people looking at his close proximity to the incoming president, Donald Trump, as a potential upside for the stock, too. How do you measure all of this? Let's, I guess, start with the deliveries yesterday and whether that news was as big of a disappointment as it's being portrayed.
I think there's the narrative that's happening with this stock, and then there's also the reality of what's going on fundamentally. And there's a bit of a disconnect here. The narrative is really around AI and the company really executing on its autonomous program. And then Elon Musk's ability to adjust regulation or impact regulations to support Tesla's approach to autonomy. And then there's what's going on with the car market and what's happening with the company, where it's plateauing and is in need of a real refresh on the models here. And
lucky for us, it's almost like Tesla's already thought of that. Oh wait, they have. That's all right. They told us recently that in the first half of 2025, which by the way it currently is the first half of 2025, they'll begin production of a new range of vehicles that are more affordable, implementing some of the learnings from their new modular manufacturing system, which was designed to mass produce ridiculous numbers of dedicated cybercabs. It's not the full modular manufacturing system because that will require entirely new production lines and facilities, but in their existing facilities, they can implement some of those learnings and meaningfully reduce the cost to produce vehicles. Now, my best guess here, and it's just a guess, is we're going to see a more affordable equivalent of the Model 3 and the Model Y. And of course, Colin does have a point. You're not going to be selling 20 million vehicles a year with an average selling price well above the average transaction price for a new vehicle purchase. Just doesn't make sense. But Tesla's Model Y, entry-level Model Y, is already available for less than the new purchase price for a vehicle in the US on average. Now, the average isn't the median. It's not the middle price. It's the average, which gets skewed a little bit because of high-end purchases. But if Tesla can put vehicles into market, then instead of starting for just over $40,000 in the case of the Model 3 and under $45,000 for the Model Y, if they can shave these prices to sub 40 grand, 35, 36, 37-ish, the number of people who can afford to purchase a Tesla will increase exponentially. When it comes to big ticket purchases like a vehicle, a few $1,000s can make an enormous difference. In case you guys haven't seen this, along the bottom here, purchase price in US dollars in hundreds of thousands. So on the end here, 160,000. And note around the $40,000 US dollar price point, the total revenue share of a vehicle around that $40,000 point of all vehicle sales, maybe 5% at most. So you don't have access to the mass market at that price point. A lot of people are stretching up to buy a Tesla because they're that much better than anything else in that price point. But not everyone can afford 40 or so grand, right? But something absolutely astronomical happens in terms of increase out of almost nowhere. For every few $1,000s, you can get below the $40,000 mark. By the time you approach the mid-30,000 range, the number of people who can afford your vehicle potentially quadrupling, quintupling, or more. And somewhere between about 35, 36, 37,000 US dollars and about 30,000, you go from less than 5% to 50%. In other words, a 10x the number of people who can afford to and will buy your vehicles if you can only shave about 25% off the price. So with rates where they currently are, the current economic situation globally, people feeling the pinch, crazy inflation, no real wage growth. At Tesla's current price points, looks like about 1.8 million vehicles a year is about as many as they'll sell under the current economic conditions. Obviously, rates come down, that will change. But the massive unlock that will happen when Tesla's more affordable vehicles enter production and begin sales is going to be massively underestimated by everybody. It's not going to have a marginal impact on the number of people who can afford to and do buy a Tesla vehicle. It's going to be enormous. But as I've said and continue to say, Vehicle sales are yesterday's news. In fact, they're last decade's news. What smart Tesla investors will be focused on, and the key word there is smart. If you're an absolute dumb motherfucker, you're probably going to be focused on the wrong thing. Smart Tesla investors will be focused on one metric: autonomous miles driven. That is the target. That is the metric. That is where you should be focused. Now, obviously, the Tesla bot is a whole other story. It's going to make autonomy look like a rounding error. But for now, the most important metric to be focused on for Tesla is the number of autonomous miles driven in Tesla vehicles. Obviously, today that number is 0. By the end of this year, it's unlikely to remain at 0. That should be the focal point. Vehicle sales, who fucking cares, bro? Autonomous miles driven in Tesla vehicles that Tesla's either taken a cut of, which probably will be on the order of about 50, 60, 70-ish cents per mile. Depends on what their cut is, right? Whether it's 25, 30% and they're charging $2 a mile on average, who knows? But then in addition to that, there's also vehicles that Tesla operates exclusively as part of their own fleet, not customer-operated vehicles, in which case Tesla takes the whole fare. The profit, not the revenue, not their cut, the profit on those miles could easily be well in excess of $1. And a typical taxi in a year does in excess of 50,000 miles. So just imagine Tesla's making 50 cents, 60 cents, 75 cents, $1 per mile in profit. If Tesla sells the Model 3 or the Model Y, those entry-level vehicles, maybe they're making $7,000, $8,000, $9,000 on the sale, on the lower end, right? But that's one-off. If that same vehicle is operating as a Robotaxi and Tesla's taking a cut of every mile driven, that one vehicle in a single year could bring in many times more profit than Tesla selling the actual vehicle itself. This is going to completely transform their business. So vehicle sales, who cares, bro? I mean, actually, who cares? The focus should be autonomous miles. How quickly does that go from 0 to 1 to 10,000 to 1 million to 10 million to 1 billion to, wait for it, 1 trillion? By the way, that wasn't a number I pulled out of my ass. At some point, it is extremely likely that Tesla's fleet of vehicles globally per year autonomously will be doing in excess of 1 trillion miles. And now back to Colin, describing the fact that Tesla probably needs some more affordable vehicles, which are right around the corner this half of the year to keep sales growing, and then how difficult it may be to deploy robotaxis.
And that's, I think the disconnect here, if you look back at a couple of years worth of results, you've seen revisions lower on both revenue and bottom line, being driven by lower margins. And I think there's another cut or two coming here for Tesla numbers as we look at the Redwood project or the lower cost vehicles starting to come to market. And so as we look at these numbers, the move higher after the election was really around the promise of autonomy and the impact that Elon can have on its commercialization of autonomous technology. And it's going to take some time, and I think there's some reality that's being built into the stock here that adjusting regulations and impacting the federal government is not an easy or quick process. And we'll see some of that digestion here over the next couple of months as they report numbers.
So the stock's up more than 50% since Trump was elected. By your tone, it sounds to me like you don't think that is warranted, or maybe you need to see a little more before you can buy into it.
We've got some real challenges around getting behind Tesla's autonomous program. The company has certainly been an innovator and a disruptor in a variety of markets, from materials to batteries to redesigning vehicles. And where we're struggling in terms of getting some more supportive of the company is really around the execution on its autonomous program. We think there's a fundamental challenge that they have working with a camera-only system, and that they need.
Oh, God. Oh, man. Please don't, Colin. Not the. I'm face palming so hard right now. I think the truth is there's a fundamental challenge with many high IQ, low common sense Wall Street analysts understanding that there are literally in excess of 1 billion examples of a pure vision only system today that drive vehicles relatively safely called humans. Now, certainly, using LiDAR and radar and a bunch of other ridiculous, expensive and totally unnecessary sensors could have allowed Tesla to begin operating their robotaxis even sooner. But Tesla's plan isn't to have a piddly little fleet of 3 robotaxis in a few cities, in a few pockets of the United States, and call it a day. Their strategy is to solve general autonomy with pure vision, which means extremely low cost to produce the hardware, the sensors to actually operate autonomously, meaning they could literally cover all the vehicles they've produced, 7+ million of them in cameras, and then with the future over-the-air update, any of them could operate as robotaxis. And their strategy is to deploy these massively. There's already more than 7 million potential Tesla robotaxis on roads today. Just requires an over-the-air software update. Now, of course, it would have been faster for them to begin operating legally, operating some robotaxis if they had 1 million other sensors as well. But their strategy, like I said, isn't to be first to market. It's to completely dominate and wipe out the market. Not intentionally, it's just that's going to be a side effect of massive, massive scale. To boil this down, the very simple point here is that Tesla already today can make a vehicle, give or take about $30,000, and there's a bit of a profit margin on it. But their Cybercab, dedicated Cybercab, they're going to be making these things for sub $20,000. Their so-called competition, such as Waymo, spend over $100,000 putting one quote-unquote Robotaxi on roads. If you didn't know anything else, but you know that Tesla can produce an equivalent vehicle that can operate autonomously for 1/5 the price of their next closest competitor, you can already tell me who's going to win. Waymo does not have a viable business strategy. Tesla's playing the long game, and a lot of folks don't seem to understand that. Colin is right, it's harder with just pure vision, at least initially. But you know at the finish line who's going to be there. It's the company that opted for pure vision in massive scale.
Need to really integrate another set of sensors, notably an imaging radar would be the likely candidate here, and then go through a more robust.
Wait a fucking minute. Did he just say they need to... I have to rewind. Dude, surely not Colin. He didn't just say they need to integrate another sensor such as radar, did he?
Execution on its autonomous program. We think there's a fundamental challenge that they have working with a camera-only system, and that they need to really integrate another set of sensors, notably an imaging radar would be the likely candidate here. And
now, I'm wondering at this point in time if Colin happens to have an embedded radar when he drives his vehicle into the Oppenheimer office or not. And does Colin have a radar? Just wondering.
And then go through a more robust training process with an incremental sensor suite. And so as we look at this and the potential complexity of a compound AI system that's really required to deliver on the autonomous promise, we see Tesla is behind some of their competitors, notably Waymo that everyone's seen, but also companies like Zoox and the development that's happening at Mobileye, or even some of the Chinese competitors. And that's a real challenge for these guys. They had been early on the EV side and really disrupted the market, and they've been a cost leader there. And we're seeing them lose their cost advantage versus some of the Chinese competitors on EVs. And
bro, what has happened to Colin's brain? There are close to zero Chinese companies making any money selling electric vehicles, and those that do make nowhere near as much per vehicle sold versus Tesla. Tesla's way more profitable than any of the Chinese EV companies. And Tesla's continuing to drive costs down. Again, those more affordable vehicles are happening this half of this year. So hang on, let me just recap. Tesla needs to add more sensors to their vehicles. They're behind in autonomy, and they've lost their cost advantage. What the... Oh, dude. I think Colin has fallen.
Lag behind some of their competitors on the AV side. And so as we look at the fundamental value capture for the company, we're perplexed that they're getting credit for succeeding in this market when they're clearly behind right now. Now, it's hard to bet against Elon given his history and the company, and we've been very bullish in the past, but right now we're just not seeing it add up to supporting the valuation.
Well, the good news for Tesla investors, at least, is that Colin does not appear to be the exception to the rule among analysts, nor institutional investors, nor commentators in the finance media, nor many retail investors. In fact, I think Colin seems to be the rule, which is totally not understanding Tesla's strategy, how far ahead they are at mass scale. They've already got 7 million vehicles on roads. They're not operating as robotaxis yet. But to not understand like that, with a software update, they'll be able to not get the brilliance of a vision-only strategy, to be fooled into thinking companies like Waymo have made the right decision by implementing a bunch of extremely expensive sensors, shackling them to an absurd, financially unviable business model of paying 5 times plus as much to put one quote robotaxi on roads and then having to pre-map everything in high definition with LiDAR. To not get that is to be a traditional investor. I mean, this is amazing stuff. People are going to look back a few years from now. We're going to hear people like Colin, and they're going to say, well, we were quite surprised how quick Tesla's fleet of robotaxis scaled, and we were quite surprised to discover that LiDAR was not in fact necessary, and we were also quite surprised to see companies like Waymo go out of business. We're also quite surprised to see Tesla massively disrupt Uber, Lyft, traditional taxis. We were also quite surprised to see how many autonomous miles Tesla vehicles drove and how quickly that number increased. And we were very surprised to see how much money Tesla printed on the back of autonomy. Now, I'm just kidding. Colin's really smart. I don't know what I'm talking about. He'll be right. I'll be the one a few years from now going, boy, oh boy, those analysts really called it on Tesla autonomy. See, Tesla's now putting LiDAR and radar on their vehicles, and they're still behind Waymo. And they real and truly lost their cost advantage over those Chinese companies somehow. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. Just got my AG1 in the mail. Legit feeling the effects after day 3. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.